Look, I'm gonna be straight with you. Right now, as you're watching this, there are 106 million Americans walking around with absolutely zero life insurance. That's 1 in 3 of us. And you know what the crazy part is? Most of them think they can't afford it. But here's the kicker, and this is gonna blow your mind. The average American thinks life insurance costs about 3 times more than it actually does. We're talking people guessing $500 a month when the real number is closer to 160. So today we're cutting through all the BS, all the corporate jargon, and we're gonna talk about how to get cheaper life insurance in America, who the biggest players are, and most importantly, why you probably need this more than you think. The cold, hard truth. Here's something they don't tell you in those fancy commercials with the happy families and golden retrievers. 44% of Americans would face financial hardship within 6 months if their primary wage earner died tomorrow. 6 months. That's it. Your family goes from backyard barbecues to wondering how they're gonna keep the lights on faster than you can say. Mortgage payment. And before you say, yeah, but I've got that policy through work, hold up. That employer-provided coverage? It usually maxes out at 1 or 2 times your salary. So if you're making 60 grand a year, your family gets maybe $120,000. Sounds like a lot until you realize that's supposed to cover your funeral. Average cost, $7,000 to $12,000. Pay off your debts, replace your income, put your kids through college, and keep your spouse from losing the house. Do the math. It doesn't add up. Why is everyone overpaying? So why are Americans getting ripped off? 3 reasons. First, most people never shop around. They go with the first agent who calls them back or stick with whatever their parents had. That's like buying the first car you see on the lot without checking the price at the dealership across the street. Second, people are buying the wrong type of insurance. They're getting whole life when they need term, or they're loading up on riders and add-ons they'll never use. It's like ordering a burger and ending up with 17 different toppings you didn't ask for. Third, nobody's comparing quotes. In America, the same exact policy can vary by 30% to 50% between companies. Same coverage, same everything, just different price tags. And most folks have no clue. The big dogs, America's largest life insurance companies. All right, let's talk about who's running this show. When we're talking about the biggest life insurance companies in the USA, we're looking at who's got the most coverage in force. That's the total dollar amount of all active policies. Northwestern Mutual, this is the heavyweight champion. We're talking over $1.8 trillion in life insurance protection in force. They've been around since 1857. Which means they were insuring people before the Civil War. They're a mutual company, which means they're owned by policyholders, not shareholders. That can mean better dividends, but it also means you're not going to find them offering rock-bottom prices. MetLife, second place with over $1.2 trillion. These guys are everywhere. They've got their name on a stadium. They've got Snoopy as their mascot. And they insure everybody from regular folks to Fortune 500 executives. They're publicly traded, massive, and have been around since 1868. Prudential coming in with about $900 billion. You've seen their logo, the Rock of Gibraltar. They're selling stability, and they've been doing it since 1875. Another massive publicly traded company with products for everyone from first-time buyers to high net worth individuals. New York Life, another mutual company with around $700 billion in force. They love to talk about how they've paid dividends every single year since 1854. That's before Abraham Lincoln was president, people. Mass Mutual, rounding out the top 5 with about $600 billion. Another mutual, another old school company, founded 1851. And another one targeting that whole "we're stable and trustworthy" angle. Now here's what nobody tells you about these giants. Bigger doesn't always mean better for your wallet. These companies didn't get massive by offering the cheapest rates. They got massive by being around forever and having huge sales forces. How to actually get cheaper life insurance. Okay, here's the actionable stuff. This is how you actually save money. Strategy 1. Buy term, not whole life. Unless you've got a very specific financial situation, you probably need term life insurance, not whole life. Here's the difference. Term life, you pay for coverage for a specific period, 10, 20 or 30 years. If you die during that time, your family gets paid. It's pure insurance, nothing fancy. A healthy 35-year-old can get $500,000 of 20-year term coverage for about $25 to $40 a month. Whole life, you're paying 5 to 15 times more for the same death benefit. But you're also building cash value in the policy. Sounds great until you realize that cash value grows at maybe 1-2% annually, and you could have just bought cheap term insurance and invested the difference in an index fund. Look, I'm not saying whole life is always bad. If you're wealthy and maxing out all your other retirement accounts and you need it for estate planning, sure. But for 95% of Americans, term is the play. Strategy 2. Compare multiple quotes. Every company prices risk differently. One company might love 50-year-old marathon runners. Another might give better rates to young parents. You won't know until you compare. Use online comparison tools. Get at least 3-5 quotes. And here's a pro tip. Use an independent broker who works with multiple companies instead of a captive agent who only sells one brand. Strategy number 3. Buy while you're young and healthy. This is huge. A 30-year-old non-smoker might pay $20 a month for $500,000 in coverage. Wait until you're 40, and that same policy costs $35. Wait until 50, it's $80. Have a health scare in between. Could be $150 or more. Every year you wait, you're older. Every health issue that pops up costs you money. Lock in your rate now. Strategy 3. Consider lesser-known companies. Those big 5 companies I mentioned, they're not usually the cheapest. Companies like Banner Life, Protective, SBLI, Principal, and Lincoln Financial often have more competitive rates for healthy applicants. They're still financially strong. Check their ratings with AM Best, Moody's, or Standard & Poor's, but they're not spending billions on advertising, so they pass some savings to you. Strategy 4. Don't smoke or quit and wait. Smokers pay 2 to 3 times more than non-smokers. But here's the good news. Most companies will reclassify you as a non-smoker after you've been tobacco-free for 12 months. That's cigarettes, cigars, vaping, chewing tobacco, all of it. Quit for a year, get retested, and watch your premiums drop. Strategy 5. Get your health in order first. If you're borderline on some health metrics, your blood pressure's a bit high, your cholesterol's creeping up, you're 20 pounds overweight, spend a few months getting that under control before applying. A small improvement can bump you from standard to preferred rating, which can save you 20-30% on premiums. Strategy 6. Pay annually instead of monthly. Most companies charge you more if you pay monthly instead of annually. It's usually about 3 to 5% more per year. If you can swing the annual payment, you'll save money in the long run. The mistakes that'll cost you. Let's talk about what not to do. Mistake 1. Lying on your application. They will find out. Every life insurance company has access to the medical,